When Donald Trump announced his tariffs, everybody expected that the economy is going to crash and we're going to fall into a recession. The United States did not impose such tariffs in almost 100 years. The last time the US did something like that was almost 100 years ago. So, when you're canceling the trade deals that it took the United States over 50 years to sign, and suddenly overnight you take all of that and you throw it into a garbage, it is normal to expect an economic hurricane. However, if you look at the stock market, for example, you see that, yes, the stock market actually tanked by almost 12% on the Liberation Day. However, since then, the economy began to grow and it hit an all-time high. If you look at inflation reports of April, when the Liberation Day was announced, it was 2.3%. So, where exactly is the high inflation that you guys were talking about? Why the economy did not crash? Was Trump right about everything all this time? In fact, if you look at the tariffs at their peak, they have reached 245%. These are the tariffs that were imposed on China at their peak. Since then, they have lowered them down and they're negotiating a new tariff rate with China. However, 245% is probably the highest tariff rate that has ever been imposed in the history of the United States. So expecting an economic crash when you are imposing a 250% tariff on your largest trading partner is a disaster. The jobs report in May wasn't actually that bad as well. It was about 144,000. On one side, these companies supposed to suffer. These companies supposed to have economic losses. Why on earth are they hiring so many people? Why do we have 144,000 people being employed? The report in June was even better. 147,000 people were employed. And even if you have listened to the reports by the Federal Reserve, they made it clear that the US economy is stronger than ever. And even me, when the Liberation Day was announced, I was expecting that the economy is going to slow down and inflation is going to rise because that's the most normal thing to expect. It's not difficult to do the math what tariffs would do on the economy. Now, if you have like selective tariffs and a few things there, it's not a big problem. But when you have such massive tariffs on every single country in the world across all sectors and industries, it is very normal to expect something like that. However, when I looked at the reports by the Federal Reserve, I couldn't actually agree with them because more jobs are being added and inflation is 2.3%. However, the US economy is getting a reality check. First of all, the stock market tanked by 2.5% in a single day, and that's because we got new jobs report. Now, first of all, let's start with inflation. Inflation has actually risen to 2.7%, and this is the June report. We don't yet have the reports for July, they're coming very soon, but I expect that it's not going to be less than 2.7%. Now, I can be wrong, but my expectations for inflation right now is higher and higher, and I wouldn't be surprised if we are going to end the year with a 3% inflation rate, which is actually catastrophic because we cannot keep having these high interest rates to tackle inflation. On the other side, inflation is rising from 2.4% or 2.3% in April to almost 3% in June. But the biggest problem is that they have revised the jobs report, and it seems like instead of 150,000 jobs that are being added, we've actually had 19,000 jobs in May and 14,000 jobs in June, which are almost 10 times lower than they have been in previous reports. And the number of jobs being added in July is about 73,000. And this number can be revised. So a lot of people are wondering, what do you mean that the number is being revised? How does that even make sense? Now, if you look at the Bureau of Labor Statistics, it's very normal that they always revise their numbers because these reports are being made month to month, and that means that by the end of the month, you might not actually have all the data. Some of this data will come a bit later, but they have to produce this report and they will give you an approximate number of how many jobs were being added. And that was their estimate. But after including all the data that came after that, it seems like the jobs are being over-exaggerated. Now, You have to understand how these reports are being made. When we say that the number of jobs being created, that is the net jobs. And that means that every single day, a lot of jobs are being lost because a lot of people are getting fired. On the other side, a lot of people are getting employed. So if you take the number of people being employed and you deduct the number of people that lost their jobs, then you get the net jobs numbers. And that is what we mean with this number. And the trend is very clear that less and less jobs are being added and more people are getting fired. And if this number is going to be revised and it's going to be negative, then it seems like the US economy is headed into a recession. And the recession is very mildly said. Now, the first thing that you have to understand is that the tariffs are being paid by the importers. A lot of people seems not to have a clear understanding of what a tariff is. A tariff is basically a tax that you impose when you bring something from outside the United States into the United States. So if you have, let's say, a 50% tariff on China, then if you're a business in the US and you want to bring toys from China or you want to bring shoes from China, whatever you bring from China, before it enters the United States, you must pay the tax. And that tax is called a tariff. And that's why everything that is being imported to the United States is supposed to become more expensive. And that's why you see that inflation rate is increasing. It has increased from 2.3% to 2.7%. Now, the reason that the numbers in April were actually great is because when they have announced those tariffs rates, they didn't say that it will be made immediately, but rather first they had a deadline, then that deadline was extended by another 90 days or so, and so on and so forth. So all the goods that being imported in April were not part of the tariffs. And secondly, usually businesses have some kind of stockpile of their products, some kind of inventory somewhere there in their backyards, and they're kept selling them. But another thing that you have to understand about many of those businesses is that businesses do not like to take immediate action. Because when you're doing business, the most important thing is business is being able to forecast your future expenses. Because if you cannot forecast what is going to happen in the next couple of months at least, then you don't have a business because you don't know how much you have to charge. If you don't know what is going to be your final expenses, then how are you supposed to know what is going to be the final cost of that product? Because if you don't have that clear data, then you don't know if you're making a profit. And if you don't know if you're making a profit, how are you supposed to have a business in the first place? And that's why businesses are very careful. They take their time, they slow down, they do their forecast, and if they see that the tariff rate is going to rise dramatically, and on the other side, they don't want to lose their clients, they will start raising their prices slowly. That could be one explanation. Now, the second explanation is that you don't want to instantly fire everybody. If you're seeing that prices are going to rise and you have to pay that 50% tariff, for example, and you don't want to entirely pass it down to the clients, because if you do that instantly, you might lose a lot of your customers. So you might absorb a portion of that cost on yourself, and then slowly over time, you will pass it down to your clients. But that means that you're operating on maybe very small profit margins. So you have to be more efficient, you have to cut costs, and you start firing your employees. These employees might not be fired instantly. You might give them a notice, they might work for another month, they might work for another 2 months. You can't just instantly get into your workforce and tell them, listen guys, everybody is fired today. It doesn't usually work like that with businesses. Businesses often plan. If we're going to fire these people, then how is the process going to continue without them? Now, another thing that you have to understand is that the profit margins between the goods and the services is very huge. If you have a service type of a business, then your profit margins are usually much higher. For example, if you're selling online products, then your profit margins are higher. If you're selling consultation products, then you have pretty good profit margins. However, if you're bringing goods from China, Vietnam, Canada, or Mexico, then you cannot lower your cost less than the price of that car or the price of that shoe or the price of whatever that product is. So you already have a fixed cost that will come alongside that good. And that's why usually the businesses that sell goods have much lower profit margin than the businesses that sell services. And these tariff rates that the United States has imposed will mainly impact the goods. It has nothing to do with the services. So we are looking into a lower GDP growth over the next couple of months. We did not see the impact of those tariffs in the first couple of weeks and the first month or two because we couldn't possibly even see the impact initially. It was impossible to see it because the real outcome of the tariffs will come a few months later. So if unemployment keeps the way that it's going right now, we are going to see a lower GDP growth, and at the same time, we are going to see a higher inflation. So there isn't going to be a huge crash like people expected, but it's going to be very simple, slow, painful recession. And that's part of what the Federal Reserve usually does. Part of the reason that we have the Federal Reserve is for them to orchestrate a soft landing. Nobody wants an economic shock. You see, one of the biggest problems with economic crises and financial crises is that if they happen out of nowhere, it is going to cause a shock in the market. That shock in the market is going to cause a domino effect, and the domino effect will even crush businesses that are good businesses. Let me give you an example. If you take any bank failure in the history of the United States and it caused a massive crash, the 2008 or all the crashes that happened before 2008, it happened very simply that one bank crashes, which was a very weak bank with very bad business model, very bad management, and because people were afraid that they couldn't withdraw their money from the first bank, they would rush to a second bank to withdraw their money from the second bank, and so on and so forth until all the banks in the country will get out of business. And that is basically the nature of all the crises in the history, not just the United States, but literally everywhere. And that's why when Silicon Valley Bank failed, for example, the government initially got into the business and said, we are securing everybody. Nobody should be afraid. If you lost your money, literally the government will pay you back. Just don't worry about it. But when you don't act that fast, like in 2008, then you have major financial corporations such as Lehman Brothers and the rest of them simply declaring bankruptcy one after another. And that's part of the reason why the Fed acted so decisively in 2020 by printing so much money. Yes, it would cause massive inflation, but it's far better than when the entire economy starts collapsing like a domino effect. But in this case, the Federal Reserve is trying, not just the Federal Reserve, but literally the entire government, trying to orchestrate a soft landing. So it's not going to be a massive crash, but we can see that the economy is slowly slowing down, the GDP is going to slow down, and inflation will slowly keep rising. Maybe it will turn into a stagflation. For now, it's not 100% clear. There are signs of that, but the economy is certainly slowing down because of these tariffs, and we haven't even seen the full effect of tariffs yet.